Introduction, Midnight to 030. Hello, and welcome back to Property Investor TV. In this video, we're going to dive into the world of buy-to-let property investing. Specifically, we'll be comparing the tax implications of using a limited company versus your personal name. This is an important decision that can have a significant impact on your bottom line. So, let's get started. 030 to 115 first. Let's define what a limited company and a personal name are in the context of buy-to-let property investing. A limited company is a separate legal entity that you own and operate. It has its own bank account, and all profits are taxed at the corporate rate. On the other hand, using your personal name means that any rental income is taxed as part of your individual income. 1:15 to 2 o'clock now, let's look at some key tax implications for each option. When you use a limited company, you'll need to pay corporation tax on any profits. This rate is currently set at 19%. On the other hand, if you use your personal name, you'll need to pay income tax on any rental income. The current income tax rates in the UK are 20% for basic rate taxpayers and 40% for higher rate taxpayers. 2 to 3 o'clock. In addition to these base tax rates, there may be additional taxes to consider when using a limited company or your personal name. For example, if you have a limited company, you'll need to pay capital gains tax on any profits made from selling the property. This rate is currently set at 10%. On the other hand, if you use your personal name, you may be able to claim mortgage interest relief as an expense against your rental income. 3 to 4:15. So, what are some key takeaways from this analysis? First, using a limited company can provide more tax flexibility and minimize your overall tax liability. This is because corporate profits are taxed at the same rate regardless of how much profit you make. On the other hand, if you use your personal name, you'll need to pay income tax on any rental income, which may result in a higher overall tax bill. For 15 to 5 o'clock. Finally, let's summarize our key findings. Using a limited company can provide more tax flexibility and minimize your overall tax liability. However, it also requires more administrative effort to manage the company separately from your personal affairs. On the other hand, using your personal name may result in a higher overall tax bill due to income tax on rental income. But you may be able to claim mortgage interest relief as an expense against your rental income. 5 to 6 o'clock. So, which option is right for you? The answer will depend on your individual circumstances and goals. If you're looking to minimize your overall tax liability and have more financial flexibility, using a limited company may be the way to go. On the other hand, if you're looking for simplicity and are willing to pay a slightly higher tax rate, using your personal name may be a good option. 6 to 7:15. Thanks for watching this video on the tax implications of using a limited company versus your personal name for buy-to-let property investing. If you have any questions or comments, please leave them below. Don't forget to subscribe and hit that notification bell so you can stay up to date with our latest videos.